Breaking economic news, the jobs report delivers, hits its numbers, and Fed liftoff is assured. Payroll jobs, 173,000 in August, but not to worry. There are 44,000 of upward revisions to June and July, so there are 217,000 new jobs in total, matching the mindless Economist consensus forecast. The unemployment rate at the finish line. It drops 0.2 from 5.3% to 5.1% today. Hallelujah. Janet Yellen's single best indicator of labor markets is at full employment. Wages for you Fed members who lament there aren't any. Average hourly earnings up 0.3% and 2.2% year to year, beating the forecast for 0.2 and 2.1%. What's the market doing? China is closed today, so it must be us, the Fed, and the American economy. Dow futures were down, call it 147 points at 8:30 jobs data time, and now down 250 points. They know the writing is on the wall. The Fed is taking away the punch bowl as the party has gone on too long. Heck, real estate values are soaring again, a new bubble, and mortgage rates of 4% need to go to 5.5%, we figure. To the report details, 173 is not 200,000. What happened? Well, manufacturing jobs fell 17,000 in August after rising 12,000 in July, so that explains 29,000 of the shortfall. Mining job losses were 9,000. Retail store hiring added just 11,000, not the 30,000 advances of May and in June and in July. What about the lower tier bottom drawer data that Yellen likes? The participation rate held at 62.6%, good, but those not in the labor force rose 261,000 to 94 million people. Before you go too far here with your tale of worry and woe about these dropouts, realize that those not in the labor force who actually want a job, those fell 203,000 to 5.9 million, a new low for this labor market recovery. It's all good. What else? Those involuntary part-time workers, these rose, rounded, from 6.3 to 6.5 million, fine, but only 13,000 of the 158,000 rise was because of slack worker business conditions out there. See, the economy is fine. The part-time workers, most of them are saying it's not a weak economy that keeps them working part-time. Net-net, the monthly jobs report delivers the goods. The report is a solid one, and it qualifies as the some further improvement in the economy that the Fed is waiting for before raising rates. We would be shocked if the Fed delays the liftoff any further. September 17 is their date with destiny. Unavoidable. The data on the domestic economy give them no excuse. Since they met in July and added the word some to some further improvement needed to hike rates, the economy has delivered. Unemployment was 5.3%, and now 2 months later, it is 5.1%. Payroll employment over the last 2 months is an increase of 446,000 to 141.8 million Americans with paychecks and nowhere safe to save their money. Only the mattress may be the cookie jar. Savings rates, the risk-free rate of return is 0. Far too many business ventures, construction projects, corporate dreams are hurdling because money is free. We've waited long enough. The economy is normal, and interest rates deserve to be too. For the Fed's game, the delay clock has run out. Take the shot. You won't regret it. The economy is better than you think.